This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome back, everybody, to Avoiding the Crowd with your host, Maj Soueidan. I'm the producer on the show, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft, BOBBYKKRAFT. But we got a packed house today. You know, there's a very special episode that we wanted to do with the Small Cap Discoveries team. You know, Paul's been doing the rounds, so he's like, you know what, I think I'm going to bring on Trevor to also do, help me out here because I've been, on every friggin' show in the country at this point. So with that, I'm going to throw it to our host, Maj, and he'll take it from there. Maj, what's going on, man?
Yeah, thanks, Bobby. Hey, Paul, Trevor, I'm really glad you guys accepted our invitation to be here today. This is going to be a good time. I think it's going to really be a nice little stock huddle pit here. So it should be a lot of fun. And I know you've done a lot of, interviews, and you've told your story a lot. I'm glad you're doing it again today. And there's a lot of people in my network probably who would like to know more about what you do. So I apologize for some of the repetition, but I think it's good for my network to hear your story. It's pretty fascinating. I went back and listened to some of your older interviews and learned a lot about you. And we got some commonalities too, which is pretty awesome. So this is gonna be a lot of fun.
Yeah, no, I'm looking forward to it, Maj. Always fun to chat with you.
Cool, man. So I guess let's get right to it. I mean, let's talk about first, talk about your assets, what you do. I mean, in terms of your website and then your conference a little bit, and then we'll come back to that later, and then we'll talk about your journey. So let's get into it.
Sure. Well, you know what? It sort of falls into that question I always get asked. You probably get asked as well. What do you do? Like, what do you do for a living?
Yeah.
I always struggle with that answer. I don't know exactly what I do for a living, but what I do know I love to do is I'm an investor, right? So everything that we kind of do as far as any kind of business or whether it's the newsletter or website, it all draws from that same sort of driving, call it North Star. We want to, try to be as diligent in investing as we possibly can. And our sort of piece of real estate we operate in is the microcap space. So, the website, Small Cap Discoveries, we are dedicated to finding great investing ideas in the microcap space, but more specifically in the Canadian publicly traded microcap space. So, that's what we do. We've sort of been at it for a while and have sort of carved out a little niche and strategy that works really well for those particular type of companies.
And what I found interesting about your story, Paul, is that like actually a lot of microcap investors, is that you didn't have really a background in finance. So maybe you can talk about that and maybe talk about some of the experiences that kind of set you up for being a good investor. You've done really well. How did that kind of evolve, you think?
You know what? I started early as far as gaining an interest in investing, probably my, late teens. And I had no real desire to get into the sort of the investment space other than I just knew I was going to do something. And, I wanted to throw a couple dollars at the space and sort of learn. But originally I went to school for construction management, which basically gave me no, no setup for this industry. Literally went and worked in the construction industry and started my own construction company for a couple of years. If anything, what it really taught me was how much I did not want to do manual labor, right? I did not want to swing a hammer my whole life. So I wanted to do something that I thought was a little easier. And I literally saw an ad in the paper that said they were looking. It was a small, I'd almost call it a bucket shop investment firm that was looking for, brokers. And I was dumb enough to call the number. And after being refused a spot in their training program, I was just persistent enough, and I think I got the secretary so upset that she finally said, "Okay, we're gonna take you in one way or another." So I became a broker. I became an investment advisor, and at this little, crazy Vancouver-based brokerage firm, which I can just imagine the Americans that are listening right now going, "Oh my God, a Vancouver, located brokerage firm." It was just that. It was pretty iffy. But I really cut my teeth, and I really got to understand, especially in the microcap space, how many fly-by-night companies that were out there that were just, almost utter and complete garbage. And, like a lot of us do, I learned the hard way in terms of what works and what doesn't work. And, really got to know the industry in the background in the nanocap space by working there. And then, if I wanted to survive, I had to figure out how to find good companies and leave the bad ones alone. And, having done it enough times, I think I finally figured it out.
I remember when I first got into, investing, and early on during my journey, I would get these things in the mail. They were like baseball cards.
Yeah.
But they were promotional kind of thing. They were all from Canada.
Absolutely. There's a huge industry around that. I remember it was just such a big deal when you heard that, one of the companies that you knew was going to do one of these mailers. You got all giddy for some reason.
Right. And I remember, I really don't remember how it happened, but I just got the sense that there was a lot of bad act or just pump and dump stuff going on there. And I hadn't really been involved in the pump and dump space at all. But Canada kind of alerted me that it existed. Mm-hmm. And, so many years I didn't invest in Canada. And it probably wasn't until maybe the MicroCap Club, seeing what you were doing, that I really got involved in it, somewhere in the last 10 years. And it just started, you're seeing that there is opportunity in Canada. And I'm just from all these past 20 years before that, I was like, oh my God, why didn't I look past that?
Yeah.
And it was really interesting. So maybe you could talk about that. Is there a minefield, of stocks, and how do you avoid it? And do you see lots of investors getting burnt in the pump and dumps area in Canada? And how would you advise them to avoid that? And especially for a U.S. investor who's heard all these negative things about, investing in Canada, what do you want to tell them?
Yes, there's a lot of, like I said earlier, there's a lot of garbage out there, right? So there's the fact that nanocaps are relatively easy to put together is part of the reason why there's so many, pretty, iffy companies out there. But that's your advantage, right? If 90% are garbage, everybody's got a perception that 100% is garbage. So if you can find those 5 or 10% companies that are not, they're typically more mispriced and more sort of lower priced because everybody's not willing to do the work to go and find those, right? So you got to sift through, for every one decent company, you got to sift through at least 9, right? If that percentage is correct. So, we've seen, we've certainly seen over the last 10, 20 years, a lot more Americans and international investors coming to start doing the work here because, that 1 in 10, or maybe 1 in 20, 1 in 50, whatever the number is, turns out to be, like an XPEL or a Hamilton Thorne or a number of other companies that are these little gems that are kind of hidden in the pile of, horse dung that the nanocap space can be, right?
No, I mean, how was your, your first experience? And I think you were buying stocks when you were 18 or 19. You had said, do you remember those first stocks and those names? And did you have success right away off the bat, or did you have a battle failure?
Yeah, I'd little bit more failure than success, but it wasn't like I started with blue chips. That was my introduction in investing was, trying to find a solid blue chip that might go up 10 or 20% in a year. That'd be a good year. And then you sort of slowly creep down into the more speculative space. And most of the early stocks I bought, it wasn't that they were successful or not. It was that they didn't satisfy my psyche. They didn't satisfy sort of what I was kind of hoping. You remember you see the movie Wall Street and somebody's making $1 million off an investment. Well, I wasn't going to do that by buying $1,000 of a blue chip company.
Right.
So it just didn't get my blood going, right? So I started going down market to look for that a bit of a high. And that's where I really started making mistakes. So it was like, you have to make these mistakes before you can get good at it. And thankfully, I did it early.
You actually ever end up investing in a fraudulent company that you didn't know was fraudulent, or just a bad business? Which one? Where were you having some of your mistakes there early on?
You know what? Everything. You named it. Like I remember a full up fraud one time. It was of all places, it was in the mining space. Some company had, as a matter of fact, it was a U.S. company that had come and listed up in Canada. So no disrespect for Americans.
We had our share here. Don't believe me.
Yeah, no, I know. Trust me, I know that for sure.
I don't mean to knock Canada here. We're going to get to the U.S. shit too.
That's right. No, it was a full of fraud. It was a company that claimed they found a new way to discover gold, or a new way to identify gold in the ground, and the stock had started to run. It was going crazy, and I thought I was going to get rich. And then one day it was halted, and the news release comes out and basically said there is absolutely nothing here. Take a hike. And so you start to learn that side pretty quickly. Now, I don't know how old a lot of your listeners are, but then the other big one in Canada that sort of sent a jolt through everybody was a company called Briex, and that was another large mining company. And there's a preponderance for scams in the mining business because it's so easy to do it, or it was extremely easy to put together fraudulent deals back then. So I mean, early on, I learned that was the sector I wanted to stay away from. So I certainly learned that out of it. But yeah, I mean, I've invested everything from frauds to just pure bad businesses. So
I remember when when I started having success, I started taking it early on. At some point when I did, going past the failures, whatever, and then I had some success, and you get cocky. I made a pretty large bet at that time for me into a company. It was called Littlefield Adams, actually. The symbol was LFA. Back then it was on the Amex. I don't know. I think it's still around today on the OTC somewhere. And I interviewed. It was one of the first companies I interviewed, so I'm getting that whole process going. They made T-shirts and clothing, and they had allegedly like a Looney Tunes kind of agreement where they had these allegedly exclusive license to do all this stuff. And I thought, all right, I found the earnings were growing, sales were growing. The guy was like from Texas. I loved investing in these, kind of like Texas companies. And then I saw the guy actually made the cover of Forbes. Sitting there, on a chair reclining. And I guess remember the picture was him in his cowboy boots with his feet on the table. I got this. It's great. Forbes. I think it was Forbes. And about a month later, everything just fell apart. It was all on fraud. And I remember my buddy at the time was working at Merrill Lynch, and he was my partner shortly after that for a while. And we wrote a newsletter early on, or he got an office, and he got in trouble because he was buying the stock, and it was a whole fucking mess. And it was my fault because, but I remember that being my first situation, and going through it was interesting because, I didn't know how I was going to feel. I actually got out of it on time. I got out of the stock. It was halted, didn't open up. It opened down, but I was up so much in it that I still made money in it. But I remember, wow, I don't want to ever be in that again. I got really lucky by taking that big bet, and that's I started really thinking I got to really start digging deeper in these things. And it was and that wasn't even an OTC company. That was listed on the Amex. And you can just imagine, and it's really scary. And you have these documents, and you think you trust everything, and it's just really a unbelievable situation that can happen in the space.
Oh yeah, I mean it happens. Yeah, I mean we've seen it happen in big stocks as well. But I go back to Briex, and Briex probably had 9 of the top 10 mining analysts in Canada were following it and covering it and giving these glowing reports on it, and it was a complete and utter scam. There was nothing there. So yeah, it's a lot of media likes to pick on the microcaps and nanocaps as scams, but they're everywhere. It's just some of them are a lot more sophisticated than others. So I think it's just a lesson that you got to be careful no matter where you're playing.
It is true, man, and I think we get an unfair rap in the nanocap space because there's actually harder fraud to spot probably in bigger companies, right? Because you have all the coverage. There's more manipulation they can do in the balance sheets and stuff, and it's hard to find it. In some way, it's kind of, once you get into this space and start doing it, it's easier to find a nanocap space. You can spot it, right?
Yeah.
And so that's something interesting. Yeah. So I mean, so if you're moving on and you're doing this for a while, and you're at some point you're going nanocap, and did you ever experiment with the U.S. companies, or was it always Canada?
Oh, actually, no. I mean, I've had some really big success with some of the U.S. listed companies. In fact, one of my biggest wins ever was a company called Medifast, which it was actually one of the best performing stocks in a long while. But and they made these sort of doctor prescribed shakes for weight loss and stuff like that. And it was an OTC stock. I think it was trading around 20-30 cents. That went to $30-40. So I never, it's not an issue for me to invest in OTC or US based companies. The issue has more to do with the process that we use to find them, right? So we, Trevor and I scour all the CDR filings in Canada, right? So it's similar to Edgar in the States. We literally go through every quarterly and annual filing there is that comes out every day. So to do that, to replicate that in the US, we probably have to start using some sort of software to do that. And if we did, we lose some of the value in what we do, right? So we just decided we'd shrink the sort of the landscape or the universe that we work from, and then really dive deep into that universe. So that's the only reason. Can we find sort of the same kind of companies in the US using our methodology? I'd say yes, but we're finding enough in Canada that keeps us really busy.
Yeah, and that's the same thing when I look at my situation in the US, and there's just so much opportunity for me. From my perspective, it's hard to go to spend enough time for me in Canada, but we are doing it here and there. But I definitely see what you're talking about. There's just so much opportunity in some of the markets we already play in that do we really need to do that? So you kind of talked about your process. Let's kind of get into that in a little bit now. One thing I love about what you do, you really value the qualitative. I mean, you're really digging into companies and trying to understand the company, I think, even before you get into the numbers maybe. But you talked about on some other podcast, I know you were on Tobias Carlisle's podcast, and you talked about your 10-point kind of a checklist. And do you have that in front of you? Can you talk about that? You had like a.
I mean, I don't have it in front of me. I can tell you. I can sort of offhand tell you the major points of it, right? So, we are investors in the microcap space because that's where you're going to find really rapidly growing companies, right? If you're going to find the next 100 bagger, you need two things, and one is you need to find a company that's growing very quickly, and you need to find it when it's mispriced, right? So that's kind of what we're looking for. The first key thing that we look for every time we look through a set of financials is we want to see that company is growing very quickly, right? So, and sort of the level that we use is a bit of a hurdle. It's 25% year over year revenue growth on a per share basis, right? So, provided the company doesn't blow up its capital structure by acquiring companies or things like that, and that's where the growth is coming from, we want to kind of see organic growth of at least 25% or higher. And there's a real good, solid reason for that. But then the other key thing we're looking for is we want to see profitability or near profitability, or at the very least, positive cash flow. Because what that does is it takes away one of the real big risks that a lot of investors don't talk about in the microcap space, and that's dilution risk, right? That's typically a killer in the microcap space. So those two things alone, if you went with those two things alone, you cover about 90% of what we consider the key metrics that you look for in a successful microcap. And then you start going down line item by line item. You're looking for things like, we want to see higher gross margins rather than lower growth margins. We want to see, ultimately we want to see management teams and board of directors with a meaningful stake in the company. we want to see that. So one of the criteria we talk about that's not necessarily high on the list, but it's a factor is what we call the discovery element or discovery process. How well known is the company, right? If there's already 3 analysts covering it, well, we're less likely to be interested. But if nobody's talking about it, if nobody is talking about it on bulletin boards or in the MicroCap Club or any of these places, that's a good sign for us. So it's a lot of there's a good deal of quantitative, but also a little bit of qualitative that we get involved with to really see if it's something that we want to try to really build our conviction around. So that's kind of it. I mean, everything else is minor. Price earnings ratio has a factor, but that's even a movable target, right?
Also, yeah, we have a 10-point checklist too, and I think a lot of what you just talked about is on ours too. So it's pretty awesome to see you're doing the same thing in Canada. Yeah. The capital structure and dilution is, like you said, something that money investors don't even talk about, and it's probably maybe the most significant factor that can eventually, make or break a multi-bagger.
Absolutely.
Yeah.
I mean, it's worked both ways, right? You see a company all of a sudden out of nowhere decide they're going to blow up their cap table, and that's not going to help in the long run. So yeah.
So if you have something we do a lot here at Geo is this little information arbitrage thing. We like to use the little term, throw it around, and information arbitrage, and it's basically trying to find information that's maybe in a filing or maybe a conference call transcript that's not in a press release. You don't see that much in big cap land. Do you see that opportunity arise a lot in the Canadian kind of universe? And I guess is there a conference call transcript, the repository where we can for Canada like there is in the US, like in Seeking Alpha?
Yeah, you know what? There may be, but I've never found one in Canada. So I'd love to find one, and if not, maybe that's an opportunity to start one.
Yeah, man, we might talk about that. Yeah,
exactly. We'll keep it quiet. That's right.
Yeah. I know just the Canadian company we gotta talk to, so we'll talk about that later.
Yeah, exactly. No, so you know what? Yeah, I think that's almost the fun part of this business is you're trying to find that little edge where you can go find a little nugget of information that might not necessarily be in the broad public domain. And we find that from time to time. Now, I think another big advantage we have is, yes, because I used to work in the industry and I know a lot of the contacts and I know where to get, some sort of information that is still public, but just a little harder for everybody to get. You use those resources, right? You call up Joe or you call up some guy that might work in the sector, and you just try to find out something that's a little harder for everybody else to get access to. So, that's the fun part. That's the fun part is finding that little nugget that everybody else has a challenge finding.
Right. Yeah. And you talk about the edges. So I think you have some edges that give you some unique perspective. One of them was that you do some private equity stuff too, or you invest in private companies also. And I think that does that help you at all? Has that helped you at all in the nanocap space, having exposure to that area, or is it totally different?
I think it helps me in my mindset. What I find a lot in the microcap space is the guys that tend to do well are guys that actually have either run a business or been very involved in a real business where you have to make sure payroll is taken care of. You got to make sure you're paying your taxes on time and all those things that are necessary for a small company to be successful. You got to take that approach. You got to take private equity type of quantitative analysis approach to the microcap space to give you an extra edge. And I think that's again another advantage that savvy investors have, and a lot of times it's not the business degree, it's the street smarts you get from running a business that becomes so needed in investing in microcaps. Like everybody thinks it's just the CEO gets up every morning and he puts out a press release and that's kind of it. That's all he does. But behind the scenes, he's wearing 50 different hats. He's having a bad day because his kids didn't do their homework. It's everything, right? You just got to be able to know that there's so many variables in the background.
Right. Yeah. Well, so when your checklist for the private equity firms, or I might call your private firms, is that a little different than the public companies? because you are investing in some startups, I would assume, when you're more
Yeah.
so in the private arena.
You know what? We don't like to invest in startups, and we like to invest in companies that have some sort of commercial success already. So what we actually did when we started investing in companies that were still private, we took the sort of public market approach we had and just brought it to the private space. So we're still looking for the same things. We want to see high growth. We want to see the right kind of valuation. We want to see the CEO's got the right kind of vested interest in it. All those factors come to play down there. The advantage you have is typically a public company has higher metrics. So, a company that's trading in the public space might be trading at 10 times earnings, but you can go find the similar business in the private space, maybe trading at 3 or 4 times earnings. And then the advantage we have is that sort of public-private arbitrage. We want to take that company that we can buy for 3 or 4 times earnings and take it public where the market wants to give it 10 times earnings. You get that lift, right? So it's all driven on dollars. It's all driven on a real sort of value comparison to something that's publicly traded.
I guess the big question: how do you find them? I mean, finding public companies is easy. I mean, or easier. You have a myriad of places you can search for them. How do you come across your private company opportunities?
Thankfully, I'm almost 100 years old, so I've aggregated contacts all over the place over those 100 years. A lot of that, it becomes word of mouth. We've got lawyers, we've got accountants, we've got all sorts of people that we, that sort of are part of our network, and every now and then they'll come to us with an idea and say, hey, what do you think about this? Or we get lucky and we find, in doing our due diligence on a publicly traded company, we find another comparable that's private. And, in talking with them, we find out that they want to do an acquisition, or they want to grow, or they want to do something. And we take advantage of that. But where we find the real opportunities are when you've got some sort of succession issue, or some business that's, chucking along quite nicely. And, the owner is 65 years old and his kid doesn't want to take over the business. And he's kind of sitting there with a business that might be, doing a couple $1 million a year in earnings or EBITDA or whatever you want to call it, or less, and they can't really find a buyer at the right price. So that's where we come along and say, wait a minute, okay, you're going to sell it for 3 times earnings, we'll give you 4 times earnings, right? And then we can take advantage of that. But it's a real business. It's not a startup. We've got public market comparables. We can see where there's the arbitrage, and that's how we take advantage of an opportunity like that.
In those situations, how active are you getting involved in the company? Are you actually helping to put new management in place potentially? I'm curious about that, because that would obviously be a little different approach to a public company.
Yeah. So yes and no. So sometimes we've done both. We've seen where sort of when you're buying a business like this, it doesn't come with management. Sometimes it does. But that's the other critical piece in trying to make it all work, is make sure you've got somebody who's got a vested interest and the skill set that can take it forward. We've had success in putting good management in. We've had the flip side where we've had a couple bad fits, and you have to the business has to be sustainable enough to deal with any sort of missteps you have. But that's the advantage, is if you can find the right situation, right people, right price, there's some pretty good upside.
Is there more opportunity for a private firm to, maybe to have some mistrust in the financials and verifying financials, versus, because you have this, you have the public documents you can reference in a public company?
Yeah.
Do you find that be challenging, or do you have a little bit of mistrust in that?
Yeah. So yeah, always, right? I mean, you step into all this stuff assuming there's always something potentially wrong. The thing about taking any of these companies public, or even during your due diligence, most of them have accounting or documents of some kind. They file taxes. There's a ream of stuff, and especially if a company's already preparing itself to be sold, you're going to have a set of financials that are somewhat either approved by an accountant, or especially if you're going public, you're going to have to get them audited anyways, right? So part of the process is getting an auditor to come in and validate them as much as they can. So it lessens the risk substantially, but it doesn't make it go away 100%. Absolutely, that's a big issue every time you look at some of these private companies.
So you gotten to sometimes like the seventh inning and said, I got to bail from this, where you was looking really, really good, and then you come to that last, yeah.
Oh yeah. You're constantly, the way I always term it is, you're always looking for that reason to say no, right? It's like, it's, you're just constantly looking for that. And we've done that. We've literally I've had 2 deals that I'd say 11th hour, we said, this is just not smelling right. There's something, you get cold feet and you leave them at the altar. It happens.
How long does that process usually take when you're evaluating a private company that you want to get involved in? Is a a year process, less than a year process? How does that work with you?
Yeah, I say on the short end, you're looking at probably, I'd say 8 months. I can't think of anyone that's taken less than 8 months to a year and a half. I think that's kind of ballpark for, these are relatively small companies, so it's not like there's a lot of work to do, but there is a sort of, it's like dating. You got to get a sense of comfort, and sometimes you feel it a little earlier, sometimes you don't. So you gotta, like, you're going to take this leap at some point with this company and say, okay, we got to get it across the goal line. We're going to be involved for quite a while, so we got to make sure that everything is checking out as well as possible. And then, to some point, you close your eyes and you make that leap, right? So, but timing wise, I'd say a good sort of 8 months, a year and a half.
Now, I was noticing on your Twitter feed, I saw something that caught my attention, that do your subscribers get involved in some of these private deals that you're doing? You let them participate?
Yeah, so we do, and they're not necessarily in private companies. At this point, they're private placements in public companies.
Okay.
So these are all companies that are already trading. They've got full audited statements, the whole thing. But one of the advantages that we have is that a lot of deals that come to us, we're kind of the only real contact that these companies have with, call it, the public markets. And we start to build a bit of a relationship with them. And rather than them going to an investment bank and trying to do a sort of a standard financing where there's going to be commissions and you get brokers or investment banks that are really doing this on a transactional basis. Kind of once they raise the money, they're gone. We're not like that. We're a lot more long term. We're putting our own money at stake. So it's a little bit different communication with that sort of that issuer. And we built a bit of a relationship with them already. So it's a great opportunity because a lot of times we're able to get it slightly cheaper than what the traditionally investment banks can do, because we're not charging a commission, and it's more solid money. And because we've got a bit of a track record working with so many companies, we're seeing more and more companies coming to us first. So it's worked out really well.
Man, it's a pretty awesome opportunity, man, because it's not buying a public company just for what it is one thing, but now when you start getting into trying to get into the financing and trying to participate in financing, it's a different ballgame. There's a special skill to that, so it's good that they have you to do that with. That's pretty awesome.
Well, it helps again that I worked in the industry, so I kind of know what works and what doesn't work out there. So it's neat and it works out well for everybody involved. That's kind of nice thing, is it's a win-win for everybody.
Now, obviously, part of your process is interviewing management teams. I think that's a really big part of what you do. Management, know what you're investing in, who you're investing in. And I saw something. How many have you interviewed in the last 6 months? I saw a tweet there. It was a crazy.
I think it's 33 or 34 companies in the last 6 months. Yeah,
that's crazy. That's awesome.
And that's the ones that we've actually posted on our YouTube channel. We've probably done 60 or 70. Some that will never see the light of day, right? And others that we sort of do a bit of an early interview to see if the company is even something we're interested in, and then we typically follow that up with something that we post on our YouTube channel. Yeah.
Right. Cool. And is Trevor? Trevor, are you involved in these interviews too?
Oh yeah, I'm just I'm the host. I make the nice intro for Paul, and he takes it away from there. Right. But I'm sort of on the back end, helping out with the technical side and helping source and find some of these sort of undiscovered microcaps that generally just aren't being discussed whatsoever. So I'm helping bridge all those gaps.
Awesome, man. Awesome. So one thing, guys, and I think you really believe in momentum investing, which is pretty awesome, because that's how for the first 20 years of my career, I was all momentum. I was read the new high list, track it, And that's where I got a lot of my ideas from. I think, Paul, that's where you're doing a lot of your idea generation comes from that new high list too. Is that still the crux of what you do with momentum? Is that a big part of what you do? Have you kind of evolved from that at all, or is that just too good? Is there any reason to go outside that?
Yeah, you know what? So that's really it's a point that I used very significantly, or I did early on, because of what I learned. There was a book that really changed the way I built my strategy, called How to Make Money in Stocks by William O'Neill. I'm sure a lot of people know that, but it really flipped on its ear, sort of how I went about looking for companies. And one of the key criteria is you want to see a company that's trading or breaking out into a new 52-week high. So that's always resonated with me. The challenge, though, a lot of times is that is being driven by some event or some, an accumulation of events. And I think in the microcap space, I think we've gotten big enough as a network to become that accumulation ourselves, right? So we're trying to find fundamentally sound companies that aren't necessarily hitting 52-week highs, but there's a good chance that if things work, we're the driver of that, right? So, so as far as momentum, yeah, we love momentum, but what we really love is that we love it when we start the momentum. And, we're called small cap discoveries. And the reason why it was called discoveries is because we think there's a real interesting dynamic in the microcap space where you see a lot of these companies, they're doing great business and they're just, plodding along very sort of quietly, and no reaction to share price. And all of a sudden something happens. The stock either jumps on the back of a quarterly statement, or maybe a newsletter covers it, or they're interviewed on TV or something. But that starts the discovery process, right? So all of a sudden the stock might hit a new 52-week high, but then I've seen it, right? The momentum that starts and continues from that could be years and years and years on end, right? And I know of one company that I can go back 5 or 6 years, and I know the discovery process started and the stock's up, 100, 120 times from that original discovery process. Mm-hmm. So that's the beauty of 52-week highs is, especially if you're a smaller retail investor and you're looking for that, you can be nimble enough to play around that. But if you've got a large amount of capital to work with, it's a lot harder to only look for 52-week highs, right? You got to look for fundamentals that justify it.
Sure. And I know when I actually started tracking like the 3-month, 6-month highs too, trying to get a little earlier, kind of beat on that. And when I was, referencing the IBD, and they canceled them early on, of course. And I would look at I would try and find them before the favorable numbers came out. Like I said, I guess they had the ranking, right? They have 2 rankings, an earnings score ranking and maybe a momentum ranking, maybe institutional ranking. And I used to try and find the ones that weren't quite there yet, on the favorable, and see if how many of those might get there eventually. So kind of the same thing what you're doing, right? You're trying to get it before everyone else is seeing it.
The other advantage I had was they weren't covering any Canadian stocks back then, right? When that really took off. And I'd almost argue, well, if they were covering the bigger ones, right? These, what you guys call microcaps in the States, we call blue chips. We call, big cap. So the beauty when I really started off was that I could go and check the 52-week highs in Canada, and nobody was checking out 52-week highs. Like, I remember I was working as a broker at the time, and my one of my managers thought I'd lost a lobe in my brain or something. That didn't make any sense. You buy low, you sell high. You sell when it's sitting there. But what really happened was I was just this rookie broker, and I decided to put together this newsletter following that strategy in Canada. And I had no idea if it was going to work, but it was a real time sort of, experiment on whether it worked or not. And the result, I literally would find a new 52-week high every week. So every week I'd come up with a new pick. And the performance over the first year was staggering. It was like, we literally beat I think every hedge fund in North America that year. Wow. It was phenomenal. So clearly something was working, right? And but it gave me the conviction to really build around that strategy. And that's, the strategy we use is tailored around how to make money in stocks and the canceling theory, but it's really tailored to the Canadian nano cap market.
And it clearly works. Clearly works.
Mm-hmm.
Trevor, did you use, was momentum part of your strategy before you came to small cap, or was that something you were introduced to when you joined Paul?
No, my strategy is a little bit different. Funny enough, my intro into CDAR, which is the regulatory filings here, was actually a sales tool for me. So I used to work at a marketing firm on the other side of this, helping out with the promotional activities for companies, and of course that was my intro to a whole sales funnel. So that was my intro to CDAR, and I just got familiar with the process starting then. But yeah, I mean, a lot of my strategy is kind of similar to what Paul's doing. I work with Paul. I've worked around some of the guys in MicroCap and just try to soak it all in as much as I can. And, generally a lot of the companies that I'm finding are Canadian based. They're cheap. They're really just undiscovered and again, driven by that discovery process. But yeah, for me, just kind of working around the industry, working at the stock exchange, working at sort of a boutique merchant bank as well as a marketing firm, you tend to figure out kind of who's doing what and where. And I actually think this would be an interesting thing for the discussion we're having here today. But, a big part of the leverage that Paul and Small Cap Discoveries has in Canada is that network. And some of these companies, it might not be about the valuation, but it might be about fixing some of the problems. So then it can become more investable by everybody else. And so leveraging that network and the people around it to make these companies more investable is actually a big part of the opportunity.
Awesome. And speaking of CDAR, while we're on it, Trevor, do you have a way to track for insider buying through the filings that we do here in the U.S. through the Form 4 filings?
Yeah, so here in Canada, we've got SETI, and SETI is the same sort of equivalent here. For me, I've got a few other platforms I use that are, they've got an API feed with the SETI. So anytime there's an insider buy, it kind of pops up on my platform. So very much similar, very similar to you guys. And again, if you just want to go back and research any of the insiders, just go right to SETI.
Hey guys, when is CDAR going to stop making you put a caption every time you got to go on the site? Is there a way to get around that?
No, that's it. I don't want him to do that because that extra effort is probably preventing 50% of the investors from doing what we do. Make it harder. Make it harder.
Do you find the filings to be the filing journey in CDAR to be different than the SEC filings, or is it once you distill, is it the same eventually, or do you like CDAR better in terms of the disclosures and how to do the research, or is it all the same in the end for you?
You know what? From a purely financial standpoint, I think it's actually for us. It seems to be more transparent on CDAR. It's almost like when I get into an Edgar filing, it seems like a different language altogether. It's no, I mean, I'm sure if we spend enough time, familiarizing ourselves with it, it's got to be very comparable.
Great. And you're definitely a concentrated investor, right? You take big bets in your favorite stocks, I think you said, right? So
yeah, we do. I think a big part of being successful in microcaps is you got to be able to earn conviction to be able to hold a large position and have it work. I've seen the opposite where, I was sort of, slicing and dicing a bunch of different things and had a very diversified portfolio. And then I have a stock go up 10 times in value, but it almost had a meaningless, effect on my portfolio, and it didn't make a lot of sense. So we've kind of gone the other way where we're prepared to get quite concentrated because we know what it can do when it works, and because we're so familiar with the opportunity, we think that we can see something go wrong early enough. And then the other big piece is, anytime you're doing this, you got to have some degree of some sort of margin of safety so that you can feel comfortable enough that even if it goes kind of sideways on you, it's not gonna kill you, right? It's gonna, it might lop off an arm or something, but at least you'll survive once you get a tourniquet on there. So no, I'm not afraid to be concentrated. I mean, we warn a lot of our newsletter subscribers that, it might not be for you. If you've got the psyche for it, go for it. If you don't, then no harm in being a little more diversified.
Are you striking hard big? I mean, when you like a company, you trying to get a big position really quick, or are you doing it over time, you think?
No, because again, experience is a great teacher, right? I've been around enough companies where if you find the right company, you're going to have a 5-year plus successful run in the stock. So there's no point in trying to get your whole position day one. you want to get, again, it's like dating, right? You want to slowly get to understand the opportunity, build a little bit of confidence, and there's no harm in paying more and getting a bigger position as they execute. You actually want that, right? We tend to sort of buy a quarter to a third when we find something we really like, and then we're looking for a reason to increase our position. And more times that's at a higher price because they're executing and because the discovery process is working.
So, do you know how in terms of time horizon, and what's the longest you've held a stock?
Believe it or not, the longest I've held an investment is 20 years.
Nice.
Now that it did not turn out perfect,
Oh, okay.
so I'm gonna say it was not something that makes me happy about. But no, I mean, so maybe it's as you get older, you start to just be lazier or crusty or whatever the term is. But you got to be prepared to, if it's the right company, you got to be prepared to hold it for however long it keeps doing the right things, right? And then on the flip side, if they're doing the wrong things, you got to be prepared to cut it as quick as you can. So it's, the old adage, you hold your winners and you sell your losers. But yeah, I've held as long as 20 years, but I'd say on average, the bulk of the returns we find you're going to get in the sort of first 3 to 5 years.
Okay, awesome. And in terms of valuation, do you care? I mean, I'm a big fan of Connor Haley. I think you are too. And he talks about PE sometimes being too much of an overused metric sometimes. And how do you view price to earnings, price to sales? Do you care about valuation in the short term when you're looking at 5 years out? Or are you looking more at the business and just, is it going to be bigger in 5 years? How do you?
Yeah, no. So, we want to try to get as many odds on our side as possible. And if you go into it thinking there's just a lot of opportunities out there, so don't settle on something that's good. Try to settle on something that's great, right? So part of being great is you got to find something that's got some sort of low price, or sort of low price metric, right? Price earnings is not the only answer. You gotta sort of think outside the box, and you're gonna find companies that are trading that sort of disguise their earnings, or like a lot of SaaS businesses. You're gonna see that they're not upfront. They might not be generating a lot of earnings, but they're generating a lot of value. And what we tend to do is not so much fixate on hard numbers, but look at comparables, look at the industry, look at a lot of other factors that would say, okay, in this particular industry, this is the cheapest of the group. And then you got to find out if it's cheap for the wrong reasons, or if it's cheap for the right reasons and it's just a function of discovery, then you got something, right? So, we've and the other thing I've learned is that, there is no real thing as a cheap price to earnings ratio in the growth space, right? I've paid 50 times earnings, which somebody would think that's expensive. But if it's a company that's growing at 100% a year, as far as we're concerned, that's cheap, right? So it really is a bit of a moving target. But we want to find something that we can argue is cheap, but a lot of times it's in relationship to other opportunities.
Yeah. By the way, speaking, remind me, I like to have you on again. So I'm not talking about SaaS. I think you wrote an article about that on your site. Maybe we can have you back on talking about that. So
sure. Yeah. We love SaaS businesses. We absolutely love them. Yeah.
That was a great article. So if we look at your some of your let's look at some of your case studies. Let's get to that point now and maybe talk about some of your war stories where you lost money, where you really thought you had it right. Maybe where you sold too early, like a great stock you sold too early, and maybe some of your big winners that you've held on to. Cover some of those maybe. Sure.
I've got a lot of war stories that I've tried to push out of my memory.
I'm sorry.
I might have to go see my shrink after this. So, no, you know what? So I think, if you spend enough time in this space, you're going to have a lot of, things that you learn from. We'll call them, learning exercises. Like I said earlier, there's been frauds. There's been examples of just poor businesses where we had a different thesis and our thesis didn't work out. But I specific companies, the one that's probably still the freshest wound is a company that like I said, I held for 20 years. We actually helped it go public, and stock ran really hard, did real well, and sort of got a lot of market attention. But it was a sector that we believed had more sort of opportunities in it than it really did. And then probably our biggest mistake is we got comfortable with the company and the theme and the industry. We got comfortable, and I think that's the mistake in this business. Is you've got to constantly be asking again, why would you hold this? Would this be a position you'd buy fresh if you didn't already have a level of comfort here? So it was, in this case, what happened was they had landed a large amount of work, and had a real high concentration of that work with one customer, and the customer pulled the business. So it went from $50-60 million in backlog to basically $5 overnight, right? So the company took a hit. And the good thing is, because of my experience with these things, we sold out. We flat out went to our subscribers and said, we're out. We don't want to look back. We're not going to point fingers. We're not going to say what if, because the sense, or the belief I have, is that you've got physical currency. You've got that dollars invested in that company, but you also have mental currency, right? And if you're still going to spend that mental currency on something that's not working, you're going to miss the next one, right? You're going to miss the opportunity because you're not thinking clearly. So we said, cut it out, boom, let's start using that mental currency elsewhere. So that was
So it's like a bad breakup when you do it's hard. The hard part's thinking about it. When you do it, you feel great though sometimes, right? You get over it, and it's like
you gotta mourn it. You gotta go through the whole process. You gotta go get drunk. that whole thing. Yeah, absolutely.
And let's talk about some of your big winners that you've actually actually something you told us you sold too early, something you held on.
So that's what I want to say, because I probably learned the most by that than anything else. Losing money happens, and you're going to learn how to do it better next time. But the biggest mistake I ever made was there was a couple of them that I sold too soon, and I'll even mention the name. It was a company called Bowflex, and this was years and years ago, and everybody knows the exercise machine and kind of what's since happened from there. But I was a broker at the time. I was recommending the stock to a lot of my clients, and I'm going to say, it's going by a bit of memory, but the stock was trading around 70-80 cents. And this is a company, the numbers were just phenomenal, right? They were growing at like 200-300% a year. They were profitable. They're trading like 8-9 times earnings. It was just something that it was, microcap dreams are made of. And lo and behold, the stock, and I'd be phoning clients and saying, we got to buy some of this. And they would say, no, it's garbage. Look, it's I see the infomercials. It's a fad. It's this. It's 100 different reasons not to buy it. But the few clients that I managed to convince to buy it, they bought it. I had a position myself, and the stock, within about a year, the stock had run from about 70-80 cents to like $10, $11, $12.
Wow.
It was a huge win, right? And of course, it's a huge win. So what do you do with a huge win? You sell it, right?
Right.
Within 2 or 3 years, it hit $250.
Wow.
And it was a monster, right? And probably and it was a Canadian listed company, eventually moved to NASDAQ and went to, I think, New York Stock Exchange, and still, I think it's called Nautilus now. So it's still
NLS. Okay.
Yeah.
That's them?
Yeah.
Okay.
That's it. It used to be a 7-cent penny stock on the Toronto Stock Exchange. So, right. But what I learned was, why did I sell it? I sold it because I was out, right? And that's literally the dumbest reason to sell something, right? Because the stock doesn't care if you're up. If it's a good business, whether it's Amazon, whether it's Apple, whether it's any one of these things that turn into 100 baggers, they don't care if you bought it at $1 and sold it at $2. If it's going to go to $1,000, it's going to do it with or without you. So, get your ego out of it and say, I'm going to hold this until it stops executing, or the valuation is so egregious that I can find something better somewhere else. Right. So that's where I really learned a lot from that, and got to really understand that you've got to really have a sales strategy that makes sense. Otherwise, you're going to miss all these opportunities.
Now, one stock, I think, XPEL, which is one you and I had. That's one of my. I had owned that. I think you had found it around 17-18 cents or something like that, whatever. And I think I bought it around then, and I think I might have sold it to Jason. When it was falling, I saw it on 2-3. Then they had the whole thing coming out, and then that's just, where's that now? Like $30-$40 now. That's
Oh no, unfortunately it's about $53-$54. Yeah.
Yeah, so that hurt me, but yeah. So we all have those, right?
Well, you bring that up because there's another funny story. You mentioned the MicroCap Club. So I was invited down to the MicroCap Club. I think I was the only Canadian in the club at that point, and they wanted to, maybe they needed a token foreigner to come and show up at the conference. And I remember they asked everybody to pick a stock and come up and sort of give your pitch. And of course mine was XPEL, and the stock was trading around 30 or 40 cents at the time. And I remember like a few guys had gone up before me, and they were literally talking about how bad Canadian companies were, right? So I literally went up next, and the first thing I mentioned is I've got this Canadian company. You can almost hear this murmur of, how quick can we get them booted out of this building? Let's call the cops. But yeah, no. So I mentioned XPEL, and it worked out okay.
That was an awesome pick, man. I just had a hard time understanding how big it could be. It was incredible to have this penny stock with recurring revenue, growing every quarter, and you knew that was eventually going to pop. But the dominance that they were able to attain in the industry that was created here from this thing was amazing.
But Maj, think of any successful, even a blue chip now or a big cap, and I guarantee you most of them start off as micro caps. Yeah. And somebody would say the same thing. How big could selling books online be? Come on, like how big could it be, right?
Right.
How big could coffee, putting together a coffee shop on the corner, how big could that be? Huh?
Yeah, absolutely. And it's one that it's a lesson to learn. Once you start looking at companies, my problem was I was looking at companies for many years. I mean, it was all fundamental based. I was using momentum, and I was pretty short term. I just want to make a lot of money quick. And you have these, like you were saying, momentum can get you these 100% gains relatively quickly. Mm-hmm. And that, doesn't sometimes keeps you from looking, wow, what up a 10 bagger, 20 bagger, right?
Yeah. Yeah. Well, I'll say an advantage for smaller retail investors in these micro caps is that literally what we prefer is we want to see companies that are, they're attacking a niche market. They're the leaders in a niche market, right? So they can maintain high margins because there's not a lot of competitive pressures. And what typically happens is that niche market grows into another niche, or they get another layer. And XPEL is an example. Like originally, they really just did this one version of paint protection film, right? And all of a sudden now it's another layer, it's another product, it's another thing that they sell into that community, and it's geographically now it's China, it's not just the US, it's all over the place. So this niche just keeps getting bigger and bigger, and then because they can dominate that niche, they go and pick a few others, and before you know it, they're doing the kind of numbers they're doing right now. It's huge.
That was an incredible pick, man. So congratulations on that.
Oh, thanks. Yeah, no, I'm clearly trying to find the next one right now.
I'm sure you will, and that brings us to let's talk about some. Well, you know what? Actually, before we even get, I would love you to give like a 90-second pitch on a stock if you have time for that.
Sure. I always love to pitch.
Before that, let's talk about one I think you like it. In Touch.
Yeah.
INXSF. I think you've interviewed Cameron a few times.
Yeah.
And I mean, I love it, but let's talk about why you like it. And then we'll get into your pitch, because I want you to. Yeah. I want to feel good about owning a stock that you own in Canada.
Yeah. Well, okay. So disclosure: I don't own In Touch, but it's one that I've followed for a while. I actually used to own it in the past, but last set of numbers came out were quite outstanding. They went through a bit of a reorg a few years ago and try to sort of merge into a new sort of line of business. But fundamentally, we love what they're doing in terms of their numbers, and we think that there's a significant amount of vested interest. I mean, they check off a lot of our boxes, right? The challenge with us is it probably doesn't fit in the top 5, top names in our list. So that's the downside is we've got to be somewhat selective with our capital. But no, it's constantly on our watch list. We interviewed him because we like the business, we like what he's done. We like the fundamentals, and I like the business.
I love Cameron. And for those listening, it's who don't know the company, it's customer experience management, and I guess they also help companies make sure their locations, different locations, are following protocol. You see, SOPs and these kind of things.
Yeah,
regulatory stuff. So, and I think one of the things that hurt them, well, at least when COVID came along, so half their customers are in the hospitality industry, so they got crushed. But they made their way back nicely from there. So it's a pretty interesting story.
Yeah,
so, I'm glad you're at least following it. If you,
I mean, it's a little bit more than following it. We, last set of numbers were, even though the revenues were down, their margins were quite nice. And the beauty of these microcaps, as long as they can keep the doors open and are lean enough to be able to survive any rough times, you can get an explosive move out of sort of a weak period. So we're watching it very closely. Yeah.
Excellent. All right, Paul, that's awesome, man. This has been awesome. So let's do a 90-second pitch.
Okay.
And do that, and then I want to get into your conference, which is coming up soon.
You bet. Okay, so the one of the ones we really like right now is a company called Medexus. Medexus is a specialty pharma company. We've been very successful in that space. We've had 2 big wins in sort of the last several years, including a company called Bioscient and one called Cipher. But specialty pharma, what they typically do is they in-license drugs from other companies and typically in other jurisdictions. So a drug that's approved in Europe, they will help bring and get approval in North America, whether it's Canada or US. And what they have is really a sales team that can go out and sell that drug better than the existing owner of the drug or pharmaceutical company can. So they know how to go through the protocols of getting a drug approved, and they have the sales team to go out and sell it. So why we like it is they've now got, well, I've lost count of how many drugs they've got under approval right now, but it's a rapidly growing company. Their traction right now, I think the last quarter is about 27 million in the quarter for revenue. They're cash flow positive and growing at about a 30 or 40% clip. So it meets sort of our hurdle of that 25% plus. But probably the best thing, as far as we're concerned, is that if you compare them to almost any other specialty pharma company, they're trading about a third the valuation. So we like it because the model works. They've got high growth. They've got a number of drugs that are still in what's called growth phase. And the valuation in comparison to so many other companies in the space is so cheap. It's Canadian listed. What is likely going to unlock a lot of the value is they're looking at getting uplisted to NASDAQ, which is obviously where a lot of the life science companies get maximum value. So we like it. It's cheap, growing, meets our criteria, and has that big catalyst of NASDAQ.
How's liquidity? Do you think they can, no problem, growing organically is going to be an issue with them? Or, I mean, with what they have on the balance sheet, or do they have to raise some money, you think?
Yeah, no, their balance sheet, if anything, the weakness is they've got probably a little bit too much debt for a company its size, but they're growing into that very rapidly. There's other opportunities that they can take advantage of, but they believe they don't have to go and raise money to do it. If they didn't, the company's still going to grow organically, very high clip. If they were to go and do something new, that would be in addition to what they have. So there's no real need to go out and buy or acquire any rights to anything else. They've got a good pipeline right now, but I wouldn't be surprised if they see another opportunistic opportunity there.
And you own the stock, right?
I own the stock, yeah. So clearly disclose that I'm a shareholder and will likely to continue to buy if it stays on here. Yeah.
All right, great. Trevor, you own it too?
I don't actually own it, no. Can't support all prospects, that's why we work together, right? I've got my lens and Paul's got his lens, but there's actually one other little note there on the Medexus I wanted to bring forward, which is speaking to the undiscovered kind of potential of it. And this is one that's something, this is a name that's kind of slipped through the cracks, and generally a lot of the penny stock investors in Canada are looking for stocks that are 10 cents, 20 cents, 50 cents. This is a $5 or $6 stock, so they're just generally not that interested in it. And then again, the market cap on the company is somewhere around 100 million right now. And so, you know, it's not quite big enough for a larger institution to really get involved, especially when you start looking at the liquidity of the actual shares that trade. So this is definitely something that's kind of just falling off the, you know, the screen for the retail investor and just not quite there for the institutional investor. And I think that's starting to change a little bit.
And Trevor, sorry to put you on the spot like that, but Bobby's been text bombing me about disclosure. So
I do not own the stock. I'll say it again, just to say it to Paul's face one more time, you know? So.
Yeah.
I don't own it, but I definitely want to look into that. This kind of like sounds like Bioscience-ish, right? I mean, these guys, it's just
yeah, it's the same model. Bioscience was a big win for us. We got in very early. It was quite you know, well discussed in the MicroCap Club. I think it still is. It's actually a great business still, and I think they've got some growth drivers now. But when you see that business and you see how you know, how lucrative it can be, it's phenomenal. And Bioscience, if anything, it's smaller. It only operates in Canada. I mean, they've got a product that they sell internationally, but Medexus has a much bigger sort of geographic landscape.
Excellent, man. Well, thanks, guys. Now let's get into your let's get into business now. You have a conference coming up. It's obviously a virtual conference, and maybe talk about this conference. How long has it been going on? You used to do brick and mortar, so we want to get in a little bit and talk about how it's going to work.
Sure. Well, okay. So traditionally, we've had a sort of real world conference where people actually show up in person. You know,
imagine that.
Imagine that, eh? Yeah. So, but you know, we focus just on Canadian companies that sort of fit our criteria. So we're not, you know, typically we don't get involved with too many startups or you know, sort of companies that don't quite meet that sort of, you know, well, the call it the Canadian canceling type of ideal. But this time we teamed up with SNN and the great team over there with the idea that let's put together a virtual that we can bring a whole bunch of great Canadian ideas to, you know, a sort of North American audience as opposed to just a small, you know, sort of Canadian audience where, you know, traditionally we'd only have about 60 or 70 people show up to these virtual conferences. But this time we wanted to take it a step further and do it in a bit bigger scale. So we're taking the same concept. We've got some phenomenal companies that we've kind of handpicked and said these guys deserve to be seen by more, you know, more investors and more investors that may not really have an opportunity to see companies like this before. So we've got companies like Medexus and you know, a number of companies that we follow, but also a bunch of companies that are kind of on our watch list that we want to see ourselves and get to know a little bit better. So yeah, it's, you know, you're going to find a lot of great companies that fit our kind of criteria and that are traditionally not out there at these type of conferences because they, you know, they're busy building their business and sometimes they just don't have the connections to even know how to be involved in one of these conferences. So we're looking forward to, you know, talking about a lot of these.
How many companies are going to attend? Do you have that list yet?
Yeah, I think we're well over 30 right now. I think we're probably going to come closer to about 50. You know, there's only so many good companies in Canada, so we can't get much more than that. But no, it's going to be a great lineup, and it's, you know, certainly there'll be a little bit different taste for everybody that's there, and enough to keep everybody busy.
So it's going to be a traditional virtual where you're going to have these, there's going to be a pitch time for these companies to talk about themselves, I guess, presentation, and as well as one-on-one breakouts, or how is this format?
Yeah, no, exactly. So all of the above. Presentations, we find that always works well, and you know, the chance for a little bit of Q&A, but more importantly, one-on-one breakouts for everybody that sees fit. Remembering that some of these companies don't present anywhere else. So, you know, you want to give them the best opportunity to get in front of as many people as possible, and vice versa. You want investors to have that chance to, you know, kick the tires and really understand what these companies are all about.
Cool. And then you have some, you know, keynote speakers coming to the thing on
We've got some great keynote speakers. You know, unfortunately, I'll be speaking, but apart from that, we've got the gosh, what's his name? Pender Funds, Dave Barr, who's a really well-known Canadian microcap fund manager. Ryan Irvine, who runs another newsletter up here in Canada, phenomenal track record. Joe Mazunder in the mining and resource space. A good cross section of guys, and just a good cross section of guys that know their space and know how to operate the microcap space. The others, we've got a handful of investors that quietly sort of operate behind the scenes that not too many people know about, but that are kind of semi-legends in the microcap space. Jason Hirschman, Meredith Brill, Matthew Martin, David McFadden. These are all investors that do it day in, day out. Dean Trottier, a number of great investors that all have, bring phenomenal skill set to the microcap space. And a lot of them without, financial background. These are all people that are in the trenches, just making it work.
You actually got Meredith to come?
Yeah. You know what? Again, the legend, right?
I don't know if she'll have a pick for you though. She doesn't one every 10 years.
I got to tell you, I'm amazed at how, I don't want to say average person because none of these people are average, but these are not people with professional background in the space, right? And if anything, if people that have, normal day jobs can do what these people have done, anybody can do it, right? You got to have a process, you got to put in the effort. And, I always say you just need one good microcap to change your financial life. And I've seen people do it. I've seen them, do it firsthand. So it's encouraging for everybody else.
It's actually potentially even better. I mean, I think to some degree not to have the background. Sometimes you're too smart.
Yep.
You just say no to everything, and you don't bring that real life or personal life experience to it.
Absolutely. You know what? I literally know analysts, MBA analysts at brokerage firms that don't do as well as some, lay people, right?
Right.
So it's analysis paralysis, right? You can spend way too much time trying to find a reason not to invest, and you're out of the game, right? So it's good to have us normal people have a winner every now and then.
You can sound smart or invest smart. It's one of those talk about. Will there be actually a pitch session going on in this thing, or is it?
You know what? I don't recall. I don't believe there's going to be a pitch session, but I'll talk to the powers that be, and we may just have to do something like that. Yeah. Awesome. Have sort of a battle of battle of the microcap investors. Absolutely.
Yeah, that'd be pretty cool, man, for Canada. Yeah, have that. All right, awesome, man. Awesome. Well, if you do, I'd love to pitch one. So.
Well, you know what? We'll make a space for you.
Awesome, Paul. Well, this has been fantastic. I'm glad we did this. It's it really we've talked a few times at the club and different conferences, but it's been great to really get to know you. And I'm really proud of what you've done for the space and what you've done. Congratulations on, being number one in the club. You really earned that, even though you let me have the spot for like a minute. Literally a minute.
Did that happen? Did I let you do that? Oh, no, never again. Never again.
And you've taken such a huge lead. I don't know if anyone will ever see it again in our lifetime. but no, you deserve it.
Somebody will. There's some young guy that'll beat the shit out of me sooner.
I'm sorry for XPEL, even though I don't own it anymore.
No, I don't actually. I had a little bit and literally sold a little bit that I had a couple of weeks ago. So I'm watching in the rearview mirror, unfortunately, and hoping that it goes $100 so I can, it can be another war story for me. Yeah.
A little badge of honor, though. Hey, yeah. Trevor, thank you so much, man, for being here too. And I know we'll have to talk to you a little bit more another time on the podcast, learn about your journey.
Absolutely. Thanks, Maj. Thanks, and happy holidays to everybody too, and everybody tuning in.
And listen, Maj, if I can say, if anybody wants any more information about the conference, then go to our website. It's Canada.SNN.Network. And yeah, definitely, if they've got any questions from there, they can ask me or Bobby. But yeah, looking forward to having everybody, including yourself, there to have a little bit of fun.
And I'll make sure to get the word out to our geo-investing community. So hopefully we'll get them there, and so they can start getting exposed to this beautiful opportunity in Canada. That it's gone beyond the baseball card situation that I when I got exposed to it. Trading cards.
Thankfully, yeah.
Very cool. All right, guys. Well, thank y'all for doing this today. We really appreciate it. This is a great show. I learned a lot. I learned something every time I talk to Paul and Trevor. So this was a lot of fun. Maj, sometimes, but usually, Paul and Trevor for sure. But guys, thank you so much for doing this again. You can follow every episode of Avoiding the Crowd on geoinvesting.com, where it has its own stream now. So you can go and find it there on the website, where you can get your 7-day free trial to check out Maj's newsletter. By the way, Paul and Brandon. Wow, look at me, guys. Hi, Paul and Trevor. They kind of look alike too. It's sometimes hard. But you can also find Paul and Trevor's newsletter at smallcapdiscoveries.com, where you can also subscribe to their newsletter talking all things Canadian microcaps, non-resource Canadian microcaps, about as niche as it possibly gets. But hey, that's where you can find opportunity. So again, you can also find Avoiding the Crowd, the podcast, on SNN's YouTube channel, youtube.com/SNNWire, and avoidingthecrowd.podbean.com for the audio-only version. And that's all I got left to plug. So with that, happy holidays, as Trevor said. Happy holidays. Thank you all for listening, and we'll see you at the SNN.Network Canada virtual event. Sorry, Maj, I had to go one more plug. So that was it.
Yeah, thanks, Robert.
Thanks, guys.
Thanks, guys. That was fun.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.